Most people only realize the bottom is in after the market has already moved. By the time sentiment turns bullish, the opportunity is gone. So the real question right now is simple. Are we at the bottom of the market, or are we just in another pause before more downside? Because right now, the market feels uncertain. Volatility is high. Sentiment is mixed. And global events are starting to play a much bigger role. Before we go any further, a quick disclaimer. This video is for educational and informational purposes only and should not be considered financial advice. Nothing discussed in this video is a recommendation to buy or sell any financial asset, including cryptocurrencies, commodities, or securities. Markets are highly volatile and involve significant risk. Always do your own research and consider speaking with a qualified financial professional before making any investment decisions. Any opinions in this video are based on publicly available information and personal analysis at the time of recording, and they may change as market conditions evolve. Now let's get into it. When markets form bottoms, they tend to follow a pattern. Not perfectly, but consistently. Sentiment collapses. Weak hands exit. And stronger capital begins accumulating quietly. One of the clearest ways to see this is through sentiment. The fear and greed index is still sitting in the fear range, not extreme panic, but far from confidence. And historically, markets don't bottom when people feel safe. They bottom when people are exhausted, when no one wants to buy, when attention disappears. That's where we are starting to get closer to now. But sentiment alone isn't enough. The real driver of crypto markets has always been liquidity. And this is where things get interesting. Because right now, liquidity is not fully expanding, but expectations are starting to shift. Markets are beginning to price in the idea that central banks may ease in the future. And historically, crypto doesn't wait for rate cuts. It moves when the market expects them. Now layer on top of that what's happening globally. Because this cycle isn't just about crypto, it's about geopolitics. And right now, one of the biggest factors influencing markets is tension involving Iran and the broader Middle East. Whenever conflict in that region escalates, the first place you see it is in energy markets. Oil. Because around 20% of global oil supply moves through the Strait of Hormuz. Any threat to that supply pushes oil prices higher. And higher oil means higher inflation pressure globally. And that creates a chain reaction. Oil rises, inflation risk increases, central banks stay tighter for longer, liquidity slows. And when liquidity slows, risk assets like crypto struggle. At the same time, we're seeing movement in gold. Gold tends to rise during periods of uncertainty, war, instability, currency risk. And recently, gold has been holding strong, pushing toward highs. That tells you something important. Capital is hedging. So where does that leave crypto? Caught in the middle. Because crypto today behaves in two ways at the same time. In the short term, it trades like a risk asset. If oil spikes, if inflation rises, if markets get nervous, crypto can move down with equities. But in the long term, crypto is also a hedge against instability, against currency debasement, against systemic risk, which is why during prolonged uncertainty, adoption and interest often increase. So right now, we're in a transition phase. And this is what makes it confusing, because the signals are mixed. On one side, sentiment is still weak. Long-term holders are accumulating. Exchange supply remains relatively tight. Institutional flows haven't disappeared. These are the types of signals that historically appear near market bottoms. But on the other side, oil is elevated. Geopolitical risk is rising. Inflation pressure hasn't fully disappeared. Liquidity is not yet fully expanding. These are not ideal conditions for a full breakout. So what does that mean? It means we may not be at a confirmed bottom, but we are likely in the bottoming process. And that's an important distinction, because bottoms are not a single moment. They're a phase, a period where price moves sideways, volatility stays high, and positioning quietly shifts. And historically, this is where smart money accumulates. Not when everything looks perfect, but when uncertainty is still present. Now, the key thing I'm watching from here is alignment. Because the biggest crypto moves don't happen randomly. They happen when multiple factors line up: liquidity improving, institutional demand increasing, on-chain supply tightening, and macro pressure easing. If tensions ease in the Middle East, if oil stabilizes, if inflation expectations cool, then central banks gain room to ease. And when liquidity expands, crypto tends to move aggressively. But if conflict escalates further, if oil spikes higher, if inflation remains sticky, then liquidity stays tight. And that can delay the next major move. So the answer right now isn't black and white. We're not at a clear, confirmed bottom, but we are seeing early signals that historically appear near one, which means the better question is, are we entering the phase where bottoms are formed? Because in crypto, the biggest opportunities don't come from certainty. They come from positioning during uncertainty. Right now, I'm not looking for perfection. I'm looking for opportunity. Because when the market is still uncertain, most people freeze. They wait for confirmation. They wait for headlines. They wait for everything to feel safe. But by the time that happens, the best entries are usually gone. So today, I also want to break down a few coins I'm watching closely right now and why they've got my attention. Not because they're guaranteed, not because I'm blindly aping in, but because in this kind of market, I'm looking for coins with either strong upside potential, strong narrative, or the kind of setup that can move aggressively if momentum comes back. And the four I'm looking at right now are SUI, Dowge, Feetcoin, and Apes. Let's start with SUI. Out of all of these, SUI is the one that feels the most established. It's not some random coin with no attention. It already has a real ecosystem, strong recognition, and a market structure people are actually watching. And that matters. Because when liquidity comes back into the market, capital usually rotates into names people already know first. What I like about SUI is that it's already had a major correction. It's been heavily sold off, sentiment isn't euphoric, and price has cooled off massively from previous highs. That's exactly the kind of setup I pay attention to. Because the best opportunities usually don't come when a chart looks amazing. They come when a chart looks exhausted. And right now, SUI looks like one of those coins where the hype has been washed out, but the attention hasn't disappeared. That makes it interesting. Now let's move to Dowge. This is obviously a very different type of play. Much smaller, much more speculative, much more narrative-driven. But that's also why it has potential. These are the types of coins that don't need perfect fundamentals to move. They need attention. They need momentum. They need a reason for people to suddenly care. And when they get that, they can move hard. What stands out to me with Dowge is that it already had a huge move, cooled off hard, and now it's sitting in a much quieter phase. That kind of structure matters because after big blow-off moves, most people lose interest. But if the project still has a community, still has meme appeal, and still has enough visibility to catch a second wave, that's where things get interesting again. I'm not looking at Dowge like some safe long-term investment. I'm looking at it for what it is, a high-risk, high-upside speculation if market momentum returns. Then there's Feetcoin. And this is where we move even further out on the risk curve. Coins like this are pure attention assets. They live and die based on momentum, social energy, and whether traders decide to rotate into them. So the reason I'd even mention something like Feetcoin isn't because it's fundamentally stronger than a serious large-cap project. It's because in crypto, especially when meme rotations begin, the market often rewards the coins that can capture attention fast. And when something has already been crushed down and is sitting near the lows, the risk-reward can become interesting purely from a trading perspective. Not because it's proven, not because it's safe, but because if the broader market turns speculative again, these low-cap meme names can wake up violently. That's the opportunity. And finally, Apes. This one stands out because unlike a chart that's fully dead, Apes actually looks like it's showing some life. It's got movement. It's got volatility. It's got the kind of structure where traders are clearly paying attention. And in these kinds of markets, relative strength matters. If a coin can show signs of momentum while the broader environment is still mixed, that tells you something. It tells you money is willing to move there. It tells you attention is building. And it tells you that if market conditions improve, this kind of coin can accelerate quickly. So when I look across all four, I'm not pretending they're all the same. They're not. SUI is the more established ecosystem play. Dowge is the higher risk narrative play. Feetcoin is the ultra speculative attention play. And Apes is the momentum style play. That's why this isn't about blindly buying everything. It's about understanding what kind of exposure each one gives you. Because if the market is bottoming and risk appetite starts to return, different coins will run for different reasons. Some will run because institutions and larger capital rotate back into stronger names. Some will run because traders chase momentum. And some will run simply because memes come back and attention floods the lower caps. That's how I'm thinking about it. I'm not chasing green candles. I'm not going all in. I'm watching structure, narrative, and where attention could flow next. And in a market like this, that matters more than emotion. So these are some of the names on my radar right now. Dowge, Feetcoin, and Apes. Different setups, different risk profiles, but all interesting for different reasons if this market starts turning. Before we go further, quick disclaimer. This video is for educational and informational purposes only and should not be considered financial advice. These are just the coins I'm watching and my personal opinions on market positioning. Crypto is highly volatile and high risk, especially lower cap and meme coins, so always do your own research and never risk more than you can afford to lose. If you found this useful, drop a like so more people understand what's actually driving the market right now. Comment what you're watching most: liquidity, oil, gold, or geopolitics. Subscribe if you want positioning before the move happens, not after. This is Golden Bull. We don't chase moves, we prepare for them. I'll see you in the next one.